Oh, hey, it's you. I thought it was an IRS agent. So by now you've probably heard that the IRS has doubled its number of agents in the field. And that prompted me to think about how that's going to affect my small business and how it's going to affect small businesses across the U.S. So let's talk about it a little bit. I'm highly qualified to talk about this because I have been audited many times by the IRS. And so I have a few pointers. So let's get comfortable and we'll talk about what you can do to survive an IRS audit. I have a book that I've written called Profit and Extreme Performance, and I should have a copy with me maybe next time. There's a chapter on there that talks about the IRS, dealing with the IRS as a small business. And I believe I opened up the chapter with a statement that says, just getting into business as a small business increases your probability of being audited. Well, now, with the IRS doubling the amount of agents in the field, the probability of you being audited has just increased. So, what can you do? And this is an area where entrepreneurs, they think about other things. They think about their competition. They think about the marketplace. They really don't think about the IRS because they think, well, okay, I'm going to fill out my tax forms, I'm going to do them correctly, and I won't have to worry about the IRS. The mistake there is a small business, when you take advantage of all the deductions, then the IRS will probably target you. So I believe a couple of sessions ago on Risky Business, we talked about red flags, and we specifically talked about having a home office and how that triggers the IRS. So everybody is fearful of the 87,000 new agents that are coming on board. It's really 87,000 agents with brand new computers. So those computers are going to comb through all the small business tax reforms. They're going to look at all those flags and they're going to kick yours out. They'll kick it over to an agent, and an agent will possibly come to your office. Now, those of you who have been following me on my YouTube channel, Risky Business, know that I always have a story. So, the first time I was audited was the very first year that I was in business, and I was audited every year for 3 years in a row. And I couldn't figure it out until finally I was able to get some help from MANA, which is a Manufacturers Agents National Association, because when I first started my business, I was a manufacturer's rep and a distributor. So I joined MANA and started asking questions about why is the IRS, just auditing me all the time. And at that time, MANA had somebody that was lobbying in DC because there was no classification for a manufacturer's agent. And so what the IRS did is they lumped the manufacturer's agents into a pile with real estate agents. And that kicked all of us out because our deductions didn't match up. They were greater. They didn't have a classification for us. So that's one way that you can get triggered for an audit. When you fill out the form, I put down manufacturer's agent. They didn't know how to do that, so they lumped me in with a category they were familiar with. The other area that you're going to get in trouble is when the IRS makes a mistake. And yes, they make lots of mistakes. When you make a mistake, it costs you money. When the IRS makes a mistake, it costs you money. So when the IRS sends you that envelope and says, hey, we've decided we're going to audit you, there's two decisions at that point two decision points. And that is, one, you check the box that says, yes, I agree with you, and you write them a check. And you have to make sure that that check is traceable. When you mail it, get it audited, get it trackable, get it traceable, because the IRS has a habit of losing checks. They lost a check of mine. I'm still waiting for them to find it after all these years. So that's your first decision point. Do I want to pay this? Now, even if they've made a mistake, so let's say they say, we looked at your audit and we think you owe us $2,000, $2,500. Here's another decision point. Do you really want to go to battle with the IRS over $2,500? And you could say, well, wait a minute, they're wrong. Okay, they're wrong. They made a mathematical mistake. And you can challenge that. And you'll probably spend more than $2,500 challenging that. So that's a point. And I always think, and I've done that. I got an audit that says, hey, we found a mistake, you owe us $2,000. I'm like, all right, it's like a traffic ticket. I got caught speeding, they caught me, made a mistake, write a check and be done with it and write it and respond to it right away. So if you decide to challenge it, you have to keep in mind that while you're challenging it, the IRS is charging you interest, late fees, and fines. So if you challenge that $2,000 and you lose, and it comes time to write that check, it may be $5,000. So keep that in mind. The other thing is, you're going to get audited. So the easiest way to avoid an audit is to overpay your taxes. Overpay your taxes, real quick trip to bankruptcy court. So you want to accept the fact that you're probably going to get audited and you want to survive the audit. So the first thing you have to do is make sure that you keep meticulous records. Now, I was able to survive my early audits because I kept all my records. They certainly weren't meticulous. It took me, I had to look around. I had them in a shoebox. I had them in a desk drawer or whatever. But, I finally got them all together, and I was able to take a $4,500 audit down to $750. And that's the other thing you have to realize. When the IRS comes after you, they've got you targeted for money. They really don't care what you're going to bring to the table. And I kept bringing things to the table until I realized they're not going to let me walk away without paying some kind of money. So I got it down to $750. I had a lot of time invested into this audit. I lost probably $4,000 or $5,000 just going to the IRS audit every month, which took me away from making money in my business. So you have to weigh that as well. So my latest and greatest IRS story was over a $10,000 discrepancy. Now, I owed them money. They said I owed them more. I had the math to prove it. My bookkeeping, everything was in place. They wouldn't accept it. Now, here's where I learned a really, really big lesson. I did not have my IRS battle team in place. Most entrepreneurs, most small businesses don't think about that. You definitely do not want to go to an audit by yourself. In fact, you don't even want to go to an audit. Flip it over to your lawyer, flip it over to your IRS lawyer, flip it over to your accountant, and let them go to battle for you. You run your business. Otherwise, you're going to be taken away from your business. So what I did at that time is I employed the bankruptcy laws to buy time so I could find that junkyard dog of an IRS lawyer, get my accounting together, and then go through the audit and survive the audit, which I was able to do. It was pretty bloody. I was pretty beat up. Did I owe him money? Yes, I wasn't disputing that at all. It was the amount of money that I owed him. And it ended up in court. The IRS does not like to go to court. So be prepared to go that far, because the IRS, their job is to separate you from your money. So when that person shows up, and this is exactly what that person said, I'm here from the IRS and I'm here to help you. And I'm like, yeah, right. So they showed up at my office. Here's the point. You do not have to let them in your office. All you have to do is say that this is my IRS lawyer. Power of attorney is already in place. And that is your contact from here on out. And I had my team in place at that time, and that's what I did. And the IRS agent kept showing up at my office. I did not let him in my office the second time. Third time, I invited him into the conference room and explained that my lawyer, my IRS lawyer, my accountant were handling this. And at that point, they threatened me. They cannot arrest you. Even if they threaten to arrest you, they cannot arrest you. What they can do is they can shut down your bank account and make it hard for you to continue to operate your business. So that happened. They shut down my bank account, and not only that, they took the money that was in my bank account, which I thought they couldn't do. And here's another point. It's the third big point. When it comes to IRS, there are no rules. They can make up the rules as they go along. So when that happened, I contacted my lawyer. My lawyer said, they can put a stop on your account, but he shouldn't have been able to grab your money. And I said, oh, can I get my money back? And he goes, no, probably not. And that's true. Once they go in, take money out of your account, no matter what, you're not going to get it back. It's just the way it works. Fortunately, I had some good credit, and I was sitting on a little cash, so I was able to keep my business going. And that's what I suggest. Have that liquidity someplace other than where the IRS agent can grab it, because even if it's, I don't know, under your mattress, you've got to be able to keep running your business while you're fighting with the IRS. The other thing is you have to protect your family. And the way I was able to do that is I owned nothing. I leased my car, I leased my office, I leased my computers. The only thing the IRS could take from me was the clothes on my back, which were all used anyhow, and I don't know why they'd want them. But so you have to protect your family, because they will threaten you. They will come in and say, look, if you don't get on board with this and do what I say, even though you're trying to work through their system of disputing the amount. And here's another good point. When you're working with the IRS, one hand doesn't know what the other one's doing. So the IRS agent who's pressuring you to comply with that amount, there's another collection agency, and you could have an IRS agent who's working out of the Philadelphia area and a collection agency that's working out of Cincinnati. They don't care. They don't talk to one another. One is accruing fines and interest rate, and let's say your $5,000 discrepancy can end up being $50,000 by the time you get through it. So you want to get through this as fast as you can. So when you get that letter, whenever I get a letter from the IRS, I stop what I'm doing. I check it that I approve it or I disapprove it. I want to have an agent come and see me. I go to the post office. I send it back with tracking number, not a sign, not a signature, because there's nobody at the IRS is going to sign anything to get a letter. So it'll just get lost. So you need to be able to track it on your end. So you send a track to the IRS, you send it to your lawyer then takes over from there. You'll continue to get letters from the IRS. Every time that happens, again, address it immediately, send it to your lawyer. And eventually it'll come to a point where your lawyer calls you and says, look, we've come to an agreement, it's going to be this amount, or they made a mistake. Very rarely do they just walk away with no money at all, but you can at least survive it. So I talked about the probability of being audited. So I'm going to come around that and you can decide whether you're going to be audited or not. So if you're a small business owner, your probability of being audited is probably 50-50. If you take advantage of everything out there, every deduction that a small business can take advantage of, then that's going to up you to probably, a little bit higher on the probability scale. The more agents that are out there, it's a numbers game for them. The computer's going to crawl through all the small business returns, get the ones that they think are most likely out of compliance and go after you. So with all the agents out there, it's up a little bit higher. So where are we? There's a high probability that you will be audited. So put your team together, get that junkyard dog of an IRS lawyer, make sure all your paperwork, when you do go to court, I found this to be true. The person with the most well-organized paperwork wins. So sit back, relax, don't panic when that IRS letter shows up. Just flip it to your team and sick them on it. Risky Business, out.